Cheers guys, how's it going? Today I just want to show you guys how to confirm reversals and help your trading. So getting right into it, we can see USD was been trading bearishly for the past 2 weeks, 3 weeks. We had multiple touches creating a support here. Price finally broke and wait for the retracement. And once we're below that level, it took a trade down into the previous low, right? So what you would have seen in real time is that price didn't create a new low. It didn't break a low, creating a double bottom, as some would say. So as price retraces, one would actually think that this is a reversal trend, and which I did too, but until I had learned this. So when we look at it, right, this move here, right, this downwards move was dotted here. This was the swing high of that move, and this is the swing low. So when price retraced back up to this level, price didn't break this level, right? We had some good rejection there, as you can see. Evening star, if you want to call it that. We had a doji. So we saw that price gave us a good rejection. So that is a perfect indication of price telling us no, we are actually still bearish. Secondly, this happens in um, this happens in Asia session. Yeah, this happens in Asia session. For me, that's 3 o'clock in the morning. You can see my time zone there. That's 3 o'clock in the morning for me. Wherever you are, it might be different. So yeah, that's our second confirmation that not only are we at a zone, but we're also in session rejecting off of this level, right? And this 4 o'clock candle would have been your confirmation if you wanted to enter sells off of support and resistance, which is actually would have been a great trade. Would have taken a couple days, but 160 pips is a lot, right? Especially knowing where to put your stop loss. That is a 1:3.5, right? So yeah, first of all, we have this double top created, right? That double top created gave us a nice movement. Now we have more volatility in the market, having a broken low, right? This is our new indication. We won't be trading this. We were waiting for price to come back to this level marked as the red zone on the red line, which is 153.895, right? That's where you want price to go before you can make a decision on what you want to trade, right? A second example, a little bit more intricate, would be USD, second pair that I'm trading, right? So if you look at this looks extremely complicated, right? But if you break it down, it isn't really. Here's our major zone with the most touches, right? We had price move all the way here last week, and then after that price just dropped. In the weekend we had a huge market gap, and price has closed that recently. So after this market gap, after this head and shoulders, right, one would assume that price is bearish. You'd want to start entering sells at this level, but that is completely incorrect, right? Why I say this? Okay, price did fall a lot. It broke a lot of lows, but again, going back to what I said before, this swing high was created by this swing low, right? So if we take the origin, right, of this move and we analyze, has the previous low broken that low? The answer is no, right? But we move into more confirmation. We have rejected off of a previous support. That's our second confirmation. Our third confirmation, and this is really the killer, we look at the daily time frame and we see how price moves off of the zone. We have a huge bullish candle that has engulfed one, two, three, has engulfed a lot of these candles previously, telling us we have a lot of momentum when it touches this area. We have a huge lower wick, right, showing that there's still a lot of bullish movement here, right. And then thirdly, we have our third bullish candlestick, right. So with all of this, you cannot tell me that price is bearish, right. It simply doesn't work. Regardless of this rejection, after this rejection, there's no other confirmation that price is bearish, rather than it's off of a resistance zone and it is rejecting. That is not enough. We look now. I showed you momentum. I showed you previous zones, and I showed you that it didn't break the previous low. Right. That is that is price action. That is market structure, and that's how you should be looking to trade. So above this zone, if I can mark it out for you, above the zone you'll be waiting for a break and retest, right, and you'll be trading the to the next high, right. That gives you 2.5 or 3.5 risk to reward ratio. Very good trade. 30 pips is a very good margin for stop loss, right. It keeps away from liquidity grabs and whatnot. And after price is broken above, it gives you a clear rejection, then you would enter. If price hasn't given you a clear rejection, wait for the liquidity grab, then enter after that, right. So yeah, that's what I have for you guys today. Thank you for watching, and I hope this improves your trading. I'll see you guys in the next one.